The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, on Thursday, as the market trade gets ready for the big USDA report releases on Friday, we saw a fairly mixed, quiet-ish day in the grain and oilseed trade, while we had a pretty impressive day over in the livestock trade, especially in the cattle market. Here to talk about it with us is our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, good to catch up with you again, sir. I hope the week's going well, and big day tomorrow, but fairly quiet on Thursday ahead of those reports, Bryan.
Yeah, big day indeed. So yeah, big from a historical perspective, big reports with the acreage and the stocks number. And, there's been probably no stone unturned as to try and outguess it right now. Suffice it to say, the ranges in both categories are rather large. Probably a little hard to quantify the stocks number. You just never know. Acreage, that's going to be a tough one too. But my personal needle, after talking to a lot of farmers in the last couple of weeks, but in particular maybe the last week, is a bias for more corn acres. It boils down to, most of the conversations are, okay, so you're planting more corn. What was the motivation? What's behind it? Well, I'm just a better corn farmer. They're looking for, a lot of farmers have had really good yields, good to really good, some not so much great in recent years because they've been challenged with weather. But with that drought monitor map shrinking and some fringe areas that could easily switch to corn, I think the idea is more corn acres, more bushels per acre, just more volume. Then you have the other ancillary reasons, guys that want to get going on beans, but it's damp out and fog. You can't go to noon and then get the crews lined up. So I'm just getting a sense that they'd rather plant more corn. I think we'll see that tomorrow.
Yeah, that's the sense that I'm getting as well. And I wonder, factoring into, we had that drop mid-May in the soy complex, and while corn has dropped but holding fairly steady, I wonder if just some of those margins may be penciling out a little bit better for some guys here right now, Bryan.
Yeah, so I was just kind of looking up at the when you look at the ratio of November soybeans divided by December corn. We've talked about that quite a bit. It's 2.3, and that's usually not high enough to say, hey, we need to plant or should plant bean acres. It's telling you to plant more corn acres. So when we look at that, or I look at that, it's only one time hit 2.45 for a day or two, and that was about 6 weeks ago. So maybe it could have swayed some acres, but that's not telling farmers to plant more corn acres. So it's going to get interesting here now. Other people counter that, and they got a good argument saying, look, you plant more corn, you get more corn, you got more storage, you're tying up, at 8% interest. You really want to tie your bins up with, paying interest on corn, all of that type of stuff. Those are all ancillary arguments. I just think the bottom line is farmers kind of go with what works best and what can generate more revenue per acre. Maybe not necessarily more profit per acre, but more revenue per acre.
Well, and thinking as well here, Bryan, looking at this corn market specifically, more sales to China, and I know that's kind of held us steady, at least here on the board. What is it, 11 to 13 days? We've seen corn sales to China here now. So seeing a little bit of demand come back there as well. And I think that's all kind of at least keeping a favorable number under this corn market here as we head into the report.
Absolutely. So the numbers have been pretty stout. It's every day. So today I think I calculated it was a little over 8 million bushels again.
Mm-hmm.
And so when you look at the combined total here for the last couple of weeks here, I've got about 129 million bushels of corn. So certainly a supportive number, a good number, but it helps inch the total export sales to where they should be. So year to date, you've got export sales. No, this is today's export sales, not the announced sale today to China, but weekly export sales at 40.8 million bushels, and that brings the year to date to 1.415, somewhere in that range. And last year we were at about 2.1 at this time, so significantly behind last year. Yet current USD expectation is 1.850 billion. And so we've still got a little bit of a ways to go to get to that level. Now it's a lot easier when you only have 385 million bushels to go than 2 weeks ago when we had closer to 500 million. But I think the market needs to see more before it gets confident we're really going to get to that USD projection. The concern is just how long can we make sales now before attention focuses on Brazilian crop availability on their second crop. A little bit late planted, 30 to 50%. We'll see what the weather looks like, but I think if you're looking for weather news to try and report out of Brazil, there's not enough on the surface to make, that's why you're probably not hearing much. There's just not enough right now to raise eyebrows.
Well, and on that thought as well, thinking weather, we're at that time period where these reports are kind of the kickoff to, okay, we focus on U.S. weather and supply and demand fundamentals. It's kind of that quote unquote kickoff to the spring planting season with these reports, Bryan.
Yep, it's kind of the gateway, and it's the preliminary acreage. There will be another one, of course, in June that resurveys farmers, so we'll get a better perspective of how spring weather, other factors in the market that are providing maybe some perceptive support, not necessarily what I'd call real support, but it could become real pretty quick, is just the amount of snow cover and cold temperatures in the north and northwest, and, just when, guys are starting to kind of go, well, I don't want to be a pessimist. When am I going to get in the field at this pace? And can we make up in timely fashion? So, yeah, you sure can. And 2 weeks from now it could be 80 degrees and weather nice, and everybody looks back and goes, "Well, I was a little bit concerned over nothing." But that's in one good case scenario. So it's starting to take center stage as a little bit more of something to be respected for sure. And that's always the case. Once you cross that March 31st, get these reports out of the way, attention starts to focus on weather, and is the crop expected to be ahead of schedule, behind, on? Right now, I would say most people I talk to are feeling like they'll be on, probably not much ahead.
Mm-hmm. Well, and to your point with that snow cover across the northern plains, I know that's having a bit of an impact in the spring wheat market. Flip side, the dryness and the worries about the KC wheat crop and how the conditions are in Kansas. Plus, then another ancillary factor is the news with Russia this week with Cargill, Viterra saying they're not going to export Russian wheat. So you think about this wheat market, some interesting storylines of note there as well heading into the end of the month, Bryan.
Yeah, and it seems like all of those storylines have sort of been ignored by the wheat market over the last several months. We've trended down. The funds have continued to sell the rallies. And yet we're at levels where you could certainly see, and not to get overly optimistic, that we could springboard right out of this. I think with hindsight, we can look back and go, the big story of the whole winter has been the corridor open, a lot of wheat moving out of Russia, hitting the spots in the world where the United Nations and others were voicing this concern about starvation and not enough supply. And well, that pipeline has been kept open regardless of a raging war and regardless of poor winter wheat conditions for at least the hard red winter wheat in the U.S. And low supplies of exportable countries. The fund money has been betting on that the corridor stays open in Russia's massive crop from last year. Read an interesting article this week. They're talking about Russia's crop, which some say is 100 million. USDA says around 93. Expectations are for 85 million. So already a drawdown to next year. Look for a drawdown to the Ukrainian crop. Argentine crop with weather this year will be down. U.S. crop probably down. Worst crop ratings ever in fall for the hard red winter wheat. Which, on a side note, could mean if corn prices are this 575-ish area or higher in another few weeks, if this winter wheat doesn't look good, don't be shocked to see some corn acres develop where winter wheat was supposed to be, especially the irrigated stuff in Kansas and in Oklahoma, if they can get it in timely and irrigated. Water's still a big problem. It's amazing how one area of the country can stay so dry.
Very, very true. Bryan, just thinking ahead of this report, risk management, what are some things that farmers need to keep in mind here? Because I know, especially after, say, 11 a.m. on Friday, it's pretty tough to trade on this report day. It's just so volatile. So what are some things to maybe keep in mind ahead of the reports, Brian?
Yeah, wonderful question. I want to kind of remind farmers of the tools that are available that might fit for the short term, and that are these short dated options that the exchange offers. So when I say short dated, it's actually a December. It's based off December corn futures, but has a shorter time window. So if you look at like a May short dated option right now, you're looking for something that's based off December, but 22 days. So what's the based off December? Why is that important? Well, let's say you purchase this put and the corn market did move lower. You can convert this into or exercise it into what's called the short futures in December. So you can have that hedge. Now you're in December futures, the hedge all the way out to next December. So you've got downside hedges or risk management in place if it looks like that's what you want. And that'll happen if you have a poor report, things go down hard, it looks like the trend's down, acres are way up. All of a sudden the exports start to tail off. You know how that can go. You're stuck back in a downtrend. So I'd look at the short dated options first in December for December corn and November beans, but I'd look in a nearby month, either May or June. Otherwise, a number of farmers have said, corn's still at a point where I can make some money at this, but I don't want to get caught hedging or forward contracting too much. Well, maybe you still want to hedge your forward contract, but then you cover it with some call options and you're not married to those positions. But that way you're in front of the report. So you defend at the downside, you get the upside potential. So those are some thoughts that if farmers want to talk about, we're happy to help kind of walk through those ideas. I think the big thing, just make sure whatever you're doing, you're comfortable and you understand the risk associated with it, and that when you implement, you understand the risk and potential.
We are having a conversation today with Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, let's go over to livestock. Really robust day in that cattle market. Love your thoughts here because it feels like we had that bit of a downtrend, and now we've come roaring back here over the course of a few
Yeah.
sessions, and we're back near those highs.
Not back, but into new highs, especially on the front month live cattle. You've got April today closing at 167.55. Just to give you some perspective, on the 22nd, which was how many days ago? 8 days ago, we are at 160.62. So all of a sudden picked up $7 this week. You got a cash product market that's really strong. Things are moving pretty aggressively there. Today we were looking at 270 dress trade, 167 cash. That's $4 higher. You've just got a really active cash market. I don't know if part of that's because of this winter storm system that's coming through, but I think that's got a little bit of a play in it. Maybe get the cattle to before the storm hits. I know parts of South Dakota tomorrow are looking for very copious amounts of snow, and then that moves eastward from there. So again, not great conditions to move livestock or cattle in toward the end of the week. But a real strong, robust market, limited supplies. Cattle on feed report recently confirmed that. I think you'll find that this afternoon, the quarterly hogs and pigs report probably has a slightly favorable tone to it. So there's just a lot of good things going, good demand underpinning the cattle market. We've been concerned that economic conditions may warrant the consumer to sort of, start to be cautious, but we just haven't really seen that yet.
We just have not seen that yet. I am searching to see if we have that quarterly hogs and pigs report in front of me. I'm just looking for it, but I'll ask you the dairy market first. I'll go there and see
Yeah.
if I get that hogs number. What are you seeing in the dairy market trade right now?
Well, we got the firmer front months but they've settled back here this past week, and that I think was some short covering, Jesse, and then just kind of this kind of horrible situation out in California where be careful what you wish for. You can't get any rain, then you get too much rain, and so you have displacement of cattle, and milkings go from 3 a day to 2 times a day. Now those things aren't probably long lasting, and probably don't have you have dollars and dollars worth of impact, but it seemed to be the catalyst to kind of get the ball rolling. Once the market posted what we call a hook reversal, that just means it went into a new low on the 13th, and that day finished higher compared to the previous day. It's kind of off to the races, and then we get what's called short covering. So if you've been on the short side of the market, you're likely to keep moving your stop order to stop your risk if the market starts to go up, or stop giving back your gains. That's another way to look at it. And so when the market goes up, those stop orders get elected. Well, that triggers another buy. Well, the buy has to find a sell. So if you get a lot of buys, they got to push prices upward to find sells. The back months, though, are stuck in the mud, still under $20. Not a bad price. I don't know if we can get a whole lot more than that anytime soon because the last milk production report continues to confirm more calls, more production, more expectations for inventory.
Very, very true. Hogs and pigs report. I still don't have that number in front of me, but like you said, expectation might be a little friendlier than we thought in this hog market, seemingly responding well into the close on Thursday. It'll be interesting to see how Friday is. And I know weekly export sales for pork were okay as well again this week, Bryan.
I'm going to say okay, but the market's been really volatile. It's been very disappointed that the cash market hasn't been able to kind of get out of first gear and really kick it in. And consequently, that's kind of the big concern. So, as we look at the picture in totality, you've got African swine fever that continues to surface in China. The expectation is at some point, if they're running short of meat, they'll import U.S. meat, but they're not. Just because you got a story out there today doesn't relate to the market blowing higher, anticipating. The market's cautious with that. It wants to actually see the sales, and then again, we'll kind of look at an industry that with high corn prices probably is pretty close to the knife. The slaughter numbers have been a little bigger, I think, in the last 6 months than most have anticipated, but not overwhelmingly, just a little more, and that's kind of kept that cash market in check. So maybe previous reports weren't quite as accurate as we'll find out that they might be or could be. I know the pre-report estimates. I don't have the actuals either yet in front of me, but all hogs, pigs, 99%. We'll see where that ends up. If that's the case, it still tells us that we're limiting supply ultimately to the marketplace, and that the hog market at current price levels should be well supported.
Well, Bryan, as we wrap things up here today, always appreciate your time and analysis. Any final thoughts, anything you want to reiterate for folks before we wrap it up?
Well, we talked about a lot of things, and we do every week. And if we look back the last 12 to 18 months and then look forward, it seems like it might be a little bit of a quieter period, but don't bet on it. A lot of volatility and a lot of big price moves, a lot of activity. We're just entering into where weather now, both in Brazil and the U.S., really starts to matter. So once the report's out of the way tomorrow, pay attention. Rallies in corn, probably until proven otherwise, still opportunities to make sales, in particular new crop. And my rationale there is simple. If I'm going to bet anywhere, I'm going to bet on your listeners, the farmers, do everything they can to produce a good corn crop. I'll assume normal weather. We'll plan for otherwise. But let's, or what I meant to say there is plan for normal crops, but be prepared for otherwise, and do that through some kind of paper strategies to cover the sales.
Bryan, if folks want some advice, I know they can reach out to you and the folks there at Total Farm Marketing. What's the best way to do that?
Phone calls, best way, 800-334-9779. If you want to talk to me directly, ask for Bryan with a Y. We've got two Bryans, but any of the advisors can help you. If you want to email me in particular, it's Bryan with a Y at totalfarmmarketing.com, or please visit our website, totalfarmmarketing.com.
Bryan, always a pleasure. Thanks for joining us, sir. Have a great weekend, and we'll talk to you next week.
That sounds excellent. Thank you very much.
Bryan Doherty with Total Farm Marketing. That is going to do it for today's Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.